You are looking live at the morning show on Stock Market TV, everybody. Good morning. Happy Tuesday. Welcome, Spencer, JC, Steve, Rick, with you this morning. Good morning, chat. Everyone's here. Excellent. All right, let's get to it. Before we start, if you're watching us on YouTube, do me a quick favor. I know I ask it all the time. Please give us a like. I actually keep track of that stuff. Believe it or not, I actually look and see our likes per video ratio. So, it helps us. It costs you nothing. So please do it. I'd appreciate that. All right, let's get the show on the road. We got JC, we got Strazza, we got charts. Let's dance.
Happy Tuesday.
Hey, guys.
Hello.
What a time to be alive, Mr. Strazza.
Yeah.
These Substack posts are crashing the market. Is that what's happening now? Is this the world that we live in today?
Don't get me started, dude. Honestly, it's a long-form thought experiment.
That's what it was.
I think they specifically said that.
It was an exercise.
It was an exercise, right?
Yes.
Yeah, it's going viral right now because this is what people want to hear about. This is like the current zeitgeist of the market, right? So I think it was well-timed as much as anything. Sure. They are selling first, asking questions never right now. For
Who's
this
they?
AI theme. Investors. So, yeah.
But they're not selling everything. You think they're going to come for everything?
Selling a lot of things, JC.
Yeah?
Yeah.
How come the advanced decline line closed at an all-time high on Friday?
And it keeps bleeding over to more and more things.
You're not wrong. You're not wrong.
I've been coming on here and saying, you think financials are going to be okay? All right, good luck with your financials. Completed the top yesterday. Industrials, incredibly resilient. Got to give it to industrials.
Are we going to lose industrials too?
I mean, do financials dig in here and fail this? Or do they leg lower? It's hard to think industrials are still making new highs.
Home construction acting pretty well too, huh?
What is?
Home construction.
Yeah. Yeah.
Consumer staples acting great. Healthcare acting great. Utilities acting great. What do those kind of things tell you, Strazza?
Yeah, there's been a defensive tone all year, really.
Yeah, except industrials.
Yeah, but
small caps, not really defensive.
High ratio and stuff. That's been working all year now.
Biotechnology still hanging in there pretty well too. Dispersion, Mr. Strazza, dispersion. Their stocks going up and their stocks going down. In the old days, we used to call this normal. Now, what would be normal if consumer staples continue to outperform and this defensive tilt continues and you get more stocks participating to the downside? Bull market canceled. You like my shirt?
What's it say? What about bears?
What is it?
No, it's a brewery.
Hold on. What does it say? With twin? Oh. Okay, cool.
Nice. Yeah, he's feeling bearish.
I'm just being festive. I'm being festive.
How he's telling everyone that
everybody's celebrating. I'm not Irish, but I wear green on St. Patrick's Day. I don't think the world's coming to an end, but everybody else does, so I'll play along.
Yeah, the robots are coming. They're going to take over. There will be no jobs. This will be worse than the Great Depression. Again, like we talked about, a couple weeks ago now? Just imagine if it turns out that AI is bad for the economy. That's the selling that you're seeing.
And then I think just as civilians, as earthlings, as fathers, husbands, businessmen, we want to think about, is AI killing the economy or is AI killing your economy? There's a point where you want to be selfish. You want to use this stuff to help you, despite what's happening to other companies and other stocks out there. So just something to think about internally. Are you using these tools? Are you benefiting or are you losing, right? And I think the goal is to not be a loser, right? Isn't that the goal?
Yeah, and protect your portfolio, because right now this whole thing is.
Yeah, I'm talking about two different things. Two different things. I don't own software stocks, right? I don't own big banks. I got a few little ones, right?
He doesn't own software stocks, guys.
Oh, I mean, maybe in my long-term portfolios, I got exposure to software like everybody in their 401k and IRA has. Yes, I do. Like anybody else.
I was just starting to think.
There's nothing I can do about that. What am I going to do?
So I could say I don't own software stocks too. We're ignoring our long-term portfolios. I don't own software.
I'm going to put money in the S&P 500 on Monday, just like everybody, like I do every month. Like there's nothing I'm going to,
Those are some fun semantics, I guess. Hey, you know how I know I'm getting older? You do this thing, like I'll look out my window, I'll like see somebody walking through the neighborhood. Like, I don't know this person. What are they doing walking over by my Rose thinks I'm crazy. I'm like, who's this? You see this? No reason to be walking. It's a cul-de-sac.
Right. No, I live in a cul-de-sac too, and I live on the top of the hill. So like if you're walking up, like you're trying to come up here. Like it's not on the way to anything. It's a dead end cul-de-sac at the top of the hill. It's like 500 feet from the bottom too. 500 feet of elevation. That's not nothing.
I'll be like, this is sketchy. She'll be like, what's sketchy? He's going for a walk.
I'm also on a cul-de-sac, but I'm on the corner. I'm the first house on the street, so I get people from the main road. Right.
You get some action, yeah.
Action.
I got nothing. I get literally the people that live on this block or people that are coming to visit this block, and then I get gardeners and FedEx trucks.
Okay.
Yeah, if I see another human that's not delivering me a package, I'm disturbed.
Okay.
What is happening to society? They're walking outside. Can you believe it?
All right.
Let's
talk about things.
All right, ladies and gentlemen, we got the Dow up a hundy this morning. Up a hundy. Dow Jones Industrial Average, the world's most important stock market index.
According to our Attorney General, that is true.
That's right. We got 48,940 coming off yesterday. S&P 500 essentially flat at 68.54. NASDAQ 100 futures up 1/3%. 24,840 up 80 handles. 30-year bond futures are flat. 117.5. Crude oil up 1%. 67 for crude oil. Continues to inch higher. Copper 1.6% to the upside. 587 for copper. Very impressive there. Copper continued to hang on there pretty good. Gold and silver both acting well. Gold down 1.3%, 51.60 this morning. Silver up almost a full percent, 87.30 with the VIX at 21, up slightly on the day. And then over in funny money, you got Bitcoin at 63,000. That's right, 63,000, down 1,600 this morning, down 2.5%. Ethereum 18.15, down 40 handles. That's 2% to the downside. Solana down 1.7%, 76.60. With the total crypto market cap, Mr. Spencer Israel, 2.16 trillion, which is the lowest level since the beginning of February when we hit those lows on the 5th and then the reversal on the 6th. We're at the lowest level since then. How do we feel about this morning's futures? What stands out?
I identify with Billy's comment, or the sentiment really, which is I felt really smart until yesterday, was escaping the majority of the carnage. Yeah, everyone feels smart when like they are you're in the things going up or you're not in the things going down, right? We all feel smart when that happens. And then when it happens to us, we're like, crap.
You know what I think is an interesting one, Strazza?
I felt the
New York Stock Exchange advanced decline line hit new all-time highs on Friday. However, the percentage of stocks on the New York Stock Exchange above their 200-day moving average hit new 6-week lows yesterday.
I'm surprised the AD line is holding up so well. Are you doing common only?
Yeah.
You would think that with the weakness in financials, there's just a lot of financial stocks that would weigh on it.
We got a lot of international, a lot of industrials too. Keep that in mind.
Yeah, industrials.
And then the S&P 500 advanced decline line also hit new all-time highs on Friday, just an FYI.
And that's always good information. But here's what's actually going on, right? That's driving prices lower now in more and more groups of the market. It's what we've been talking about. It's the size. You come on here and say, "Oh, Bitcoin doesn't matter because of the size," right? You want
I
to
say Bitcoin does matter now. I
Okay,
think
fine.
it matters now.
But you want to look at the stocks that are getting tossed out and crushed, right? And you want to look at their market caps, and you could do a little math there, and basically, like you want to think of that as like total invested dollars. Like people are getting hit in a big way if the biggest stocks in the world are in 20, 30, 40% drawdowns, like Oracle and Microsoft. Then what happens is they have a liquidity situation on their hands and they have to sell other things, right? So that's the importance of, you talk about an AD line, fine, breadth is still good. But if the biggest and best stocks, the most owned stocks in the world, just keep on getting hit day in and day out, no bid, that liquidity event or that liquidity issue just gets worse and worse and worse. And that selling has to spread to other areas of the market.
The median stock in the S&P 500 is up 7%, by the way, for the year.
Keep giving me the bull stats, dog. I love it. I get it.
It's not bull stats.
No,
It's just what the stock market is doing. It's not bull or
Okay.
bear stats. I'm just telling you what's happening in the market. I'm not disagreeing with what you're saying, right? Everything Strazza is saying, guys, if you're listening out there, he's spot on. There's $20 trillion in the Mag 7 alone, right? Yeah. Spread that out a little bit further down the cap scale. Now you're talking like 20 trillion already is a lot. And that's just 7 of them. So add the rest, and now you're talking 30, 40 trillion dollars in market capitalization. I mean, that's 2/3 of the stock market already is what you're talking about here. So Strazza is 100% right when it comes to liquidity. Now, when it comes to like the market in general, I mean, man, just the median S&P 500 stock is up 7%. Like that is very impressive. And then on a monthly basis, just for February, the median S&P 500 stock is up 3.3%. The median stock this month is up 3.3%. Also, very impressive. So that's why, we weigh the evidence here. What Strazza is saying is not wrong. What I'm saying is not wrong. This is literally what's happening, right? Facts only. And so if the market is being led by consumer staples, healthcare, utilities, real estate, like what are we talking about here? Like what kind of market is this, right? And are there a lot of these communications and staples and all this stuff that add up and help those advanced decline lines and kind of, help that? Yes, yeah. That can only persist for so long, right? Yes. It's essentially what Strazza is talking about. And one argument was that, all right, it's confined to these names. The companies that have exposure to software are going to get hit, and that's the end of it. And bull market rages on, right? That's the bull case. The bear case, as Strazza has been making multiple times over, is that it's unsustainable. It's spilled into some financials. Now it's going to spill into the rest of financials. Industrials have held in really, really well. Really well. Industrials holding in this well is unsustainable if the market's going to collapse. Right? So if you're looking for what is the next sector to participate to the downside, we've seen some herky-jerky in those logistics companies, and they bought them right back. So they tried to knock them down, Strazza. They tried to knock down these industrials. Haven't yet. But if Strazza's domino theory here, we call it domino theory, right? Domino thesis here. Wouldn't industrials, maybe homies, be next?
I think so. I was looking at that Coil and Caterpillar yesterday. Like, I was looking at puts. Not cheap, though.
That better resolve higher. Otherwise, that's a big problem.
Yeah.
Right?
Yeah. And just the way that they sold the financials yesterday is problematic for now. You want to see that bottom out like immediately.
Small caps and mid caps continue to act really well. Again, 0 large caps in those indexes. So,
Yeah. A lot of things are kind of whistling through the graveyard, for lack of a better phrase.
You know what? That's probably a good way to think about it, because whistling through the graveyard, that's what Caterpillar's been doing. That's what small caps have been doing, just kind of churning sideways. Yeah. So that's not a bad way to think about it. Here's what stands out to me. Throw up, Strazza got a great chart too. Why don't you start with Strazza's chart? Slide 4 there.
Oh yeah, just show
this is fantastic. I like to pride myself in good charts. Yours is better than mine.
That relative trend can tip you off to so many things in so many different situations. And, in this case, financials have not been leadership, at least on a large cap weighted basis, for 2 years now? So it's been rough out there, or no, a year now. It's been rough out there on a relative basis, while the absolute trend still looked okay. And we talked about it last week. We literally said one big red candle blows this top. And you saw it yesterday. If you get some follow through here, you got that VWAP, right? So that's really a confluence of support there, really big level. If they go, it's hard to look at this chart and say the bulls are still in control of financials. And then, that could be problematic for the broader market.
Listen, it's hard out there for a pimp. And these are the pimps, right?
Yep.
These are the pimps and the drug dealers.
Sure,
right?
sure.
I mean, it starts here. The party. I mean, this is where the party starts, right? So if you think the market, listen, we could be sitting here a week from now having a very different conversation. They need to stick them now.
Yeah, right now.
They need to stick them now. And I'll tell you what, let me zoom in. Throw up slide 3 there. We could zoom in on the relative chart. It's now or never. It's now or never, right here. 5-year lows on a relative basis. This is the one. On an absolute basis, you can argue it's still kind of shaky sideways. This is a big one, guys.
Meanwhile, Stripe just announced a new tender offer that values their non-public company at $160 billion, which is make it one of the biggest companies in the world. And Robinhood just announced that their users can now access private markets and make private investments right on the Robinhood app. So all this stuff.
What could go wrong?
Yeah, right. And just another thing too.
Hold on. Let's stick to that. You can take this chart off for a second. I'm just curious your thoughts, because I'm like, this is America. Let them do whatever the fuck they want. So I am not opposed to letting any investors invest in private companies, like having this like accredited investor situation. Like, is life fair? Is the world fair? No. But like, why? I don't know anything about politics or government or anything like that, but like, I don't see why other investors need to be accredited. That changed, right? That officially changed. They don't have to be accredited anymore for private investments.
I don't know if it's already in effect.
But the point is, I'm all for letting people blow up their accounts. I have no problem with that. Like, you can't go into a grocery store and go down the cookie aisle and kick all the obese people out of the cookie aisle. You can't do that, right? You can't go to the bar at noon on a Monday and, kick out all of the alcoholics. Like, you can't do that. And in the market especially, you can't stop people from blowing up their accounts, right? I would encourage that sort of behavior and freedom in this country that we call America, the greatest hockey country in the world, Steve Strazza.
Right. That's right.
Greatest hockey country on earth. Facts only.
Gold.
It's math. You can't stop, so number one, freedom. You will not take our freedom. Number one. And number two, is this indicative of, all these private credit companies are getting smoked. All these VCs that are loaded up in software are getting smoked. And now they want to let the retail public in, like from a sentiment information. That's interesting. So that's how I think about it. What about you?
You know how I think about it. I was just explaining to the guys on our morning call, the way that these private markets, private investments work is if they get to your desk, you probably don't want them. If they get to the small person, a million smart guys already passed.
Yeah.
So, hey, look, I really like this too. Let's talk about this real quick. First of all, somebody said IBM getting killed yesterday was not normal. No, that kind of price action is absolutely normal. That is the norm in this environment right now. So Anthropic. What kind of
price action?
IBM. So every day we wake up and find out that Anthropic is replacing a new industry. Billy Cunningham. Yeah, I've never seen anything like this. I'm sure that's maybe stuff like this went on during the .com. I know Amazon had their moment where like they were taking over any industry they wanted. But like, dude, day in and day out, Anthropic drops a press release and some stock or group of stocks is down 10, 15%. It's absolutely wild. Who is Claude? No?
I believe Claude Lebowski. I believe Claude was a nihilist. I believe.
Nice.
They believes in nothing. They believes in nothing, Lebowski. during the great financial crisis, you kind of saw some of this because you'd hear whispers about exposure to these areas, right? So like, I remember when Bear Stearns had a couple of hedge funds that blew up because they were all loaded up in some subprime shit or something like that. I forget what it was, but it was early. It was early in the great financial crisis. And then moving forward, anybody who had any exposure, it was like Countrywide, you know, they're in the mortgage business. And then anybody that had to do with that. And then it was like the next derivative. It's like, well, what about the ratings agencies, you know, and then the bond issuers? And then it was like every like step along the way, along like the chain of like, right? They kept like bombs kept going off as the domino continued. This, I'm not saying that this is exactly like that, but if you're asking the question, have we seen something like this before? We have. It wasn't software stocks. It was like mortgage related things and right. And bond, you know, derivative bond offering, right?
Yep.
But yeah, you know, like headlines would drop. And then here's what I'll tell you. Like Strazza says, they're selling them and they're, you know, they're asking questions later. What's interesting is when they ask the questions, what do they do when they get those answers? In those logistics companies, they bought them right away, very aggressively, right? In the other ones, they have not.
Yeah.
So something to watch. Like even in the logistics companies, they sold them and asked questions later, and then they asked the questions, they got to answer, and then they bought them. They haven't done that in the other areas. You know, that's to me, that's the big one. You know. Okay. So I have here slide 5, please. This is a big one right here. You know, this one continues to be a key driver to Strazza's earlier point. These are the companies that everybody owns. To my point last week, it's not just the Americans that own this. It is the international investors. Foreign investors don't own foreign stocks. They own big American ones. Also, it's not just an American thing. It's an Earthling thing. Good. And so this was the chart that I started with in January in Miami at the Portfolio Accelerator. Which if you're going to join us for Nashville, Spencer, drop the link. If you're going to join us for Nashville, you got to tell us now. It's in May, right? So if you're coming, let us know. But this is where I started because this was really stood out big time to me. Talked about it on Josh Brown and Batnick's podcast, Compound, last month also.
I'm coming.
You're coming to Nashville?
I'm coming to Nashville.
Nashville, good times. Great time, Nashville. Dude, the caviar at the Four Seasons is legit.
We're not going there.
Well, Strazza and I might mosey on over for a little snack.
Okay.
Yeah.
They also have these like smoked old fashions that go great with the caviar, but like I retired from old fashions, but maybe I'll do one. I retired. Dude, I've been so good about it too. Like I don't drink that shit anymore, man. I can't.
But when they smoke them, hard to say no.
Especially there, they do a nice job. Great bar at the Four Seasons in Nashville. Great bar. Yeah. I appreciate a good bar. You know?
I'm in, dude.
Yeah. So what do we think about this, Strazza? This doesn't look like a bottom to me. This looks like a downtrend.
No, I still think you could treat everyone on their own merit, but on balance right now, you know, things are not good for the Mag 7 or mega cap growth.
NVIDIA tomorrow. Is this the most important earnings event of our generation?
The problem with this is, like, does it matter what they say in this market? They're going to come out. They're going to beat. They're going to raise. That's all well advertised.
Right.
Jensen's out here talking about how they can't even keep up with demand. So we know it's going to be a beat. But is the market going to kill it anyway? You know.
Right. So we know it's going to be the greatest earnings report in the history of corporate America.
Doesn't matter right now.
But that's my point. That's my point. Like everybody knows that. Like I don't know anything, and even I know that.
Microsoft just put out a nice beat. Look what they did to that. Meta had a great beat. They popped it and crushed it. I mean, so it doesn't really matter who you are these days. AMD up big this morning, just inked the deal. I believe that's worth north of $100 billion with the Meta. See if that moves.
But is this the circle jerk trade where they're all just giving each other money?
Well, they're actually buying things. They're buying chips.
I know, but isn't the argument that they're just giving each other money and it's just like this like round robin? Isn't that
that is one of the arguments, yes.
That's more like the OpenAI, Oracle, private equity situation.
So Meta's not included in that circle?
They're all kind of caught up in it to an extent. Yeah.
But if you look at like Oracle and Microsoft, They're selling together out here.
Like the worst blunt rotation ever. Oracle, Microsoft, bunch of pedophiles. Look at slide 2.
Michael Burry is right again. Oh, that's funny.
Go to slide 2.
You know what? You wouldn't know it because he deletes his tweets. So
no, but there's like bots and stuff that keep track of all of them. Don't worry.
He's a loser.
I mean, the poor guy. The poor guy is like. I mean, he obviously he's has some issues. You know, like
go away.
Leave him alone.
Go away.
I mean, think about somebody with issues like that, and then they make a movie about you. Like, you're just going to be even crazier. Like, what do you? You know what I mean? The guy was probably already. You know, let him live. Let him live, man. People hate on this guy so bad. Clearly, he has some issues. So just leave him alone. Like, what if he was so angry about? Like, do you go kick dogs down the street like puppies? Like, what's wrong with you guys?
Guarantee you, he hangs out with Ray Dalio.
God,
guarantee it.
All right,
Murray on the Epstein list.
I do want to talk about the beat report, but before we do that, what is this chart? I know what the chart is, but
well, I love that you're going to bring up the beat report because it couldn't be more relevant right now. But this is the chart, and I don't know anything, but what I do know is that this is the biggest company in the world. So the fact that it's the biggest company in the world, does that make it the most important company in the world? It's got to be in the conversation. I don't know. So this consolidation is tight like a tiger. Several month consolidation out of the leader in the group of leaders that are all getting slaughtered. If NVIDIA is breaking out of this consolidation to new all-time highs, and semiconductors, by the way, not to be Mr. Bull stat guy this morning, but I'll give you the bull stats. Semiconductors closed yesterday at the highest levels in history relative to the S&P 500 on a market cap weighted basis, right? NVIDIA obviously helping out. So I ask you, Steve Strazza, is this not the most important company in the world, the biggest company in the world, and therefore the reaction to the market on Wednesday and Thursday is the most important reaction to this bull market this year?
Yeah, it's the reaction, right? Because fundamentals couldn't be better. They check every box. Fundamentals are great.
Everybody knows. Everybody knows. Right.
As you're pointing out, technicals pretty solid here too, right? Especially on a relative basis, holding up far better than most things in its space, NVIDIA. But sentiment, right? That's that reaction. That's really the third area that you have to analyze when you're doing research on a company. Fundamentals good, technicals good, but the sentiment around these stocks right now just couldn't be worse. And you could use like what's very strong intermarket evidence right now and say the odds are probably low at this point that this resolves higher. If none of the other Mag 7s can really resolve higher from their current consolidations, if they're all getting taken down, that in my mind tells me it's a pretty low probability that NVIDIA is just the one that gets it done. Now, if they do, right, and I think there's a good shot just based on the technicals and the fundamentals here, maybe things turn. That would be a great first step, right, for mega growth, Mag 7, maybe finding a floor here. NVIDIA would be the one to kind of set that off. I think that would make sense. Or maybe they take it down first and it's got to bottom out like the others.
So it goes up to 240. You're looking at a 25% increase. You're looking at right now, NVIDIA is a $4.6 trillion company. I hate to break it to you, but if this breaks out, you're looking at the first $6 trillion company on earth right here.
They deserve to be.
Right? Because this gets you to 240, easy 250. There's your 6 trillion. 6 trillion is what an upside resolution gets you. It would be the only one, and it would set off a major rotation, I think. But, you know, semiconductors, all-time highs yesterday on a relative basis, Strazza.
I like it, dude. Look.
On an equally weighted basis, not pretty. Have you looked at semis on an equally weighted basis, or is that against your religion?
Yeah, I see what's going on. I got some skin in the Nvidia. I'm rooting for it. Let's see.
I'm saying that momentum rolling over on semiconductors equally weighted is a little nasty. Little nasty. All right, tell me about the beat report. This is helpful for this week, actually.
The beat report is so key right now for this kind of market, right? Because think about the story I'm saying. Just take software stocks. A million fundamental reasons right now to buy software stocks. Very few fundamental reasons not to, unless you could see into the future and project that the fundamentals will deteriorate in the coming quarters. For now, they haven't. Then on the other hand, you have a million technical reasons not to buy software. Zero technical reasons to try to buy software right now. So how do we kind of like put those two worlds together, merge that story together? It's sentiment. That's what sits in the middle and explains the big differences here. So for right now, these stocks are doing great, these big tech stocks. Fundamentals are just fine. But from a technical standpoint, they're really hard to touch because sentiment is just so bearish right now. Stocks are just getting killed left and right for seemingly idiotic reasons sometimes. So the beat report, we're just trying to put together the story, watching these reactions really closely. We'll see evidence of a turn in the earnings reactions when it comes. But this quarter's been as bad as any quarter this whole cycle in terms of the big cap techs and the way that they're reacting to earnings. We have one that's really interesting today. I want to throw up the Domino's pizza.
Yeah, great day.
Yeah. I think, a lot of these consumer stocks, these restaurant stocks, doing okay out here. Domino's, this is its second consecutive positive earnings reaction, up nicely, 4.1%, following their most recent report. And this sure has all of the looks of a failed top to me. So that's the DPZ, maybe against that shelf of support at 395-ish. You had a nice little scoop, right? And then they failed that top on the earnings reaction, gapped higher. And now you can pretty much drop a VWAP from the top of the range or even the pivot high and look for a nice entry here. I think if Domino's digs in and fails this top, it's going back to those old all-time highs, which are around 560.
And it was it was a mixed report, right? Because I know they raised their dividend, which is usually good and always good, right? And the EPS came in a little bit light, right? But the reaction says it all, and that's all you really need to know.
Yeah,
right?
they beat on revenue, slight beat on revenue, slight miss on earnings. So it was no perfect report, right?
Yeah.
Which I'd like to see too. It was what we would call a mixed report.
But this kind of speaks to the theme. If I don't know, Domino's is discretionary, right? So it's been a weak tape for discretionary.
Yeah.
So if Domino's can hold up, then there's Jason, there's Steve. He's gone. Goodbye. If Domino's can hold up, I mean that's a sign of something for discretionary.
Is Domino's considered a tech stock still?
That argument is like so 2018, man. There was a time
that anymore.
No, they don't say that anymore. There was a time. I mean,
like Domino's is a logistics company. That's not the case anymore.
I don't know if it's probably not still true, but like, you had kind of the big three, right? Domino's, Chipotle, Shake Shack, like these darling restaurant stocks that had these insane premiums for no real reason, right? I guess there's perceived growth there. Not quite true anymore, but yeah, Domino's was just zoom out of the chart. It says it all right there. So
no, seriously. Throw up the healthcare rotation.
Stock. By the way, the expected move for Nvidia is like $10-11 this week. So we're at what, 191 change right now. I like to keep that in mind as we approach earnings reports. What does the market think we're going to move?
So healthcare continues, right, to show strength. I came into this year thinking, listen, midterm election years, not good years, but it's a bull market, could be a good year. Good things and bad things, but most likely dispersion, most likely new leadership than what we saw last year. That was kind of where my head was at. So healthcare was one of those areas where, if there's a defensive tilt in the market, healthcare can do well. And also if the market's a bull ripper, healthcare can do well, right? It was one of those things where it was kind of like, I can see a scenario where healthcare stocks do well, regardless of what the rest of the market is doing. And I think, and we're seeing that play out, and I don't think that's over at all. Healthcare's done nothing forever. Look at this underperformance going back to the beginning of the bull market. Literally, this entire bull market, healthcare's been an underperformer. And this ain't Canada, right? In Canada, they don't have healthcare stocks, not allowed against the rules in Canada. But in America, the greatest country for hockey on this here planet of Earth, healthcare stocks are a big component, right? Top 5 sectors in both the Dow, S&P. Go to the NASDAQ Next 100. So in the NASDAQ, stocks 101 through 200. And healthcare is the largest weighting there, right? So there's a lot of healthcare exposure in major indexes. And I think that goes, I think people forget about that. There's America, Spencer.
I don't think people forget about it. Wait, so where does healthcare rank on the exposure list for like the S&P, for example? It's like
I think it's like 11%, something like that. It's number 5 last I checked.
I would have guessed like 4. All right, so yeah, it's
4%. No, man, this isn't.
No. That it's number 4.
Oh yeah, well it was, and then it hasn't for a while. Consumer. I mean, listen, it's basically tied with discretionary communications. They're all in that like 9-11%.
Yeah, all right. So yeah, it's middle of the pack. They're all lumped together.
Not middle. It's in the upper. It's in the upper pack.
All right.
Like if healthcare has a good year, it'll be the second largest sector in the S&P 500. Right? Like look at this underperformance for the last 3 years.
I mean, maybe it could.
I think that if healthcare has a good year, it becomes the second largest sector in the S&P 500 because the S&P 500 is a momentum index that buys more of the good ones and less of the bad ones. And the fact that healthcare has been such an underperformer, all the other sectors have eaten into it. But healthcare at the end of this year could very well be the second largest sector in America in the S&P 500.
I guess we'll see.
I mean, yeah. I hope so.
You know what's funny? Like, there's probably no chart in the world that frustrates me perennially more than the IBB. You just had a great 8 months for biotech, and here we are. It's at all-time highs, and this thing was dead money for a decade. You had a great 8 months at the end of last year, and now it's just still just back going sideways for how long? Who knows? But it's just hanging out near all-time highs. But it just seems like every time I look at IBB, I can never find a reason to like it. You know what I mean?
It's up like 9 out of the last 10 months in a row.
I just said
like, what else do you want?
It had a great 8 months. Congratulations, right?
Yeah, it's about to close the month on Friday at the highest levels in history, above the 2021 highs.
Yeah, but again, looking at it right now, like I don't know if I would want to buy. Well, I know you would never buy it, right? But like,
I think there are biotechnology stocks that can be bought here.
There's new ones up 20% every day. We got top gainer this morning is biotech VIR, right? Up 33%.
And then, so just to be clear, IBB is the large cap, which is pushing up against new all-time highs. Just made a new all-time high this year. XBI is the small cap because it's equally weighted, so you're going to get a lot of the little guys. So IBB is going to include the big ones. XBI is going to give you exposure to the little ones. The little ones are still playing catch up, still not at those former highs, while IBB is.
Like I said, every time I look at that chart, which isn't all that often, but it happened to be yesterday, I just can never find a reason to like it or like biotechs. So that's just me. Couple other headlines I wanted to get to. We kind of covered a few of them already. We talked about the AMD. We talked about the AMD meta thing we did, right? Or we mentioned it at least.
Yep.
We talked about Dominos. We're kind of getting Tuesday, Wednesday, Thursday are kind of the big earnings days of the year. Tomorrow's beat report will be much more full. This morning we had Home Depot. Let's look at the Home Depot real quick. I haven't actually looked at the stock yet this morning. Okay, up 2.5%.
That's part of that home construction sort of situation, Spencer. I mean, home construction hanging in there really well. Strazza's always the one pointing out that home construction trades a lot like industrials. And so seeing relative strength out of the home construction and seeing industrial strength too, that's not shouldn't be. I guess that's not surprising, right?
All right, this is it's good. This is interesting because it was the headlines were good there, and the reaction after what, an hour and a half is, I guess now it's been more like 3 hours, has been thus far good. Home Depot has been a dog, obviously. So, and especially when you compare it to Lowe's, they're not even in the same galaxy recently. I mean, this is one to watch today. Very curious to see how this holds up, because Home Depot has been the laggard of the group. So, all right, that jumps out to me. That's kind of the big one in the morning, right? There's not that much in the way of earnings today. Right now, tonight we have some software, which is interesting. Workday. That's gonna. I think everyone kind of wants to hear what the software companies are going to say, right? Because
are they going to believe them?
It's not about believing. I think I want to hear their like justification or their explanation for like how existential AI is to their business, right? Workday is obviously caught. Workday.
I think it comes down, honestly, man. I think NVIDIA. I think there's big implications for NVIDIA. I agree with Strazza. The likelihood of this thing breaking out is not great. The equally weighted semiconductors.
I just don't know. Like, I want to hear from the CEOs because I want to hear them try to like make sense from their point of view, and they're going to be bullish. They have to be bullish, right? It's all going to be glass half full for them. That's their job. But I just want to hear them like sort of justify the recent price action. Jensen Huang is going to say the same thing on Wednesday that he said for the last 2 years, right? 3 years. So I don't know, his messaging is not going to change. Dude, but the game has changed for everybody else, right? The game has changed because the stocks have changed. So I want to hear what the CEO of Workday, the CEO of Salesforce on Wednesday, right? I want to hear what I want to hear them trying to explain this to us, because it's shoot first, ask questions later. That's the way it's been. But I want to hear them. They have to defend themselves. So defend yourself. They only get it 4 times a year.
I hate to be like Mr. International guy, because I don't want to be that guy, and I don't want to be like cherry picking guy, because I know that people are loaded up in these tech stocks when everything else seems to be working out great. Like, Korea is hitting new all-time highs today, up another 2%, absolutely ripping. Switzerland is up 1% today, putting in a god candle. The Swiss market index, new all-time highs today. You got China up big today. The CSI 300, which is the S&P 500 for China, looks pretty damn good. Philippines hitting new 6-month highs today. Japan, tight little consolidation, acting well. Amsterdam, new all-time highs today, breaking out of this consolidation. Thailand has been on quite the ripper. You got the SET index pushing up against new highs. Sweden, shout out to the Stockholm 30 index, hitting new all-time highs today. So again, there's
okay. So what you're saying is all those trends are still intact. The trends that we've discussed for a year now.
I'm just seeing what's happening. Yeah. I'm just like pointing out, like, hey, don't forget what's happening over here. There's definitely some strength.
I've been meaning to check up on like Google search data, because just anecdotally on my feeds, I'm just seeing a ton more mentions of international. You can't be in the US. You can't be just the US. You have to diversify. International, ex-US.
I'm hearing a lot also.
Yeah. So I want to check on the Google search data to see if that shows through there, because people are talking for the first time that I can ever remember.
Yeah, you're not wrong.
People are talking about that.
You're not wrong at all, Spencer. You're spot on.
There's an entire community of people, mostly on the internet, and it's just VOO and chill, or VTI and chill, right? Just buy the major indexes and chill. And that is sort of giving away now to this idea of you need to maybe diversify a little bit. And well, VTI is diversified. It's as diversified as it gets. But
I'll add one. Thailand's ripping today too.
Oh, I mentioned it. Shout out to the SET index.
Yep. Big breakout there for the THD too.
How'd you like Bangkok? You like Bangkok?
Not really. I thought Bangkok was really freaking weird. No.
Were you just hanging out at seedy places, or was it actually weird?
It was not chill. No, it was fun. We had fun there, but it's not at the top of my list for sure.
Did you go to any animal where things involve animals?
I mean, I got clothes made out of animals.
You got clothes made out of animals. All right. They're good with their ping pong balls there. Is that the place?
Dude.
It's family show. All right. No comment.
Our boy Caleb Franz is going to Bangkok like in a few days.
Oh.
Yeah.
Why don't you bring him in? Why don't we tell him where to go, Strazza?
He can't. He can't come out here because he's going to Bangkok. That's the answer. So
nice.
Yeah.
That is hilarious. Strazza, what about Vietnam? How are we looking out there? You got the long dong?
Long dong, always and forever. But yeah, dude, Vietnam been a leader and been sideways now since like October. So you could probably find a nice entry coming out of this consolidation. I think not even back to those old highs from a couple of years ago. Yeah, looking good, looking real.
We
good.
got the Ho Chi Minh Index.
I'm not kidding when I say this. I do think Vietnam is by far the most exciting story long term of any emerging market out there, period. Difficult to invest in. That's the problem. I think it only becomes easier over time. But I think the runway here.
Slide 9, please. Slide 9. This is
massive.
Relevant. This is relevant to what they're saying. It might be a little bit hard to see because the table is super vertical, so we'll make it bigger. But here, let's see if we
zoom in there. See if you can zoom in. You can barely see it.
Hard to see. All right, sorry.
South Korea at the top.
Yeah.
India at the bottom. Dude, India, get your shit together, India. What are you doing over there? What are you guys doing?
India that's an AI story, man.
Is it because all the IT in India?
Yeah.
AI is killing all the Indian IT guys?
Yeah, basically.
All right.
And I think India is the least exciting emerging market story out there.
When it was the only for a long time.
Yep.
It's a bummer. I really love India. I really do love. What a great place, man. I really have really enjoyed my time there. I come back to America so inspired.
Great friends from over there.
Such nice people.
A new Indian grocery market opened near me. We went on Friday for like the grand opening. It was grand opening because it was packed. But yeah, getting involved with.
How far are you from Edison?
I'm not from Edison. No.
No. How far are you from?
Oh, how far am I?
Yes, I know, Spencer. You don't look like you're from Edison.
I'm 25 minutes from Edison.
25 minutes? That's not bad.
Yeah. So.
Dude, go in there, get some eats, man.
Yeah, for sure.
Go get some Ganesha statues. I got a Ganesha statue right there. See? That's Ganesha right there.
I've always wondered what that is. Now I know. Okay, before we bring on Phil, can we bring on
Indian god?
Can we just bring up the other ETF power rankings chart? This was sent out this morning, I believe. This was the US indexes, slide 8. There we go. Thank you, Rick. So shout out to Louis who put this together for us. Microcaps, kind of the best game in town, and still. So,
just look at that bottom. Large cap growth, Nasdaq 100, mega caps, S&P 500. Look at the top. Micro cap, small cap value. Right?
Funky.
Oh man, listen, it's never a dull moment in the market. Never a dull moment.
It's just, it's weird to see mid cap growth up there. I guess they've had a couple of good weeks, but it's value up top, growth on the bottom. If this is hard to see, that's the story.
How about CME and CBOE breaking out? CME looks unbelievable, up almost 2%. CME, they just, whatever's going on there, AI's not eating them.
Nope.
They are benefiting from all of the volatility and all the YOLOing going on in the markets, and they are the pimps and the drug dealers, and business is good.
I think this is a 24/7 market play, right? Like that's coming, right? The whole 24/7 trading, and
it's what JC said too. They can't. No, the AI can't touch what they do. The fucking red tape to be in their business. Give me a break, dude.
Yeah.
And
so they got that's what they call a moat.
Yeah, right. We're going to talk about this on Open Bar. We're going to talk specifically about those two, actually, JC, because financials just completed the top, and you don't have to be a CMT or a technical analyst to identify a top. We all know what tops look like. See them from a mile away. What do you do when you spot a top in a sector that you're invested in? How do you act, right? So that's what we're going to talk about in the Open Bar. Not just the top in financials. What do you do when you see a top? Right?
Turn it upside down.
Yeah.
No, for real. Like I've always inverting charts is like really helpful. You know, because there's people that are like dyslexic and they can't understand that things go down. They can only see things that are going up. So if you flip it upside down, you can see it going up. It's like, oh shit, okay.
Nice base. I'd buy this. Right. We used to do the mystery chart and fool people.
That's right. Oh, the mystery chart days.
All right, we'll have to
mystery chart.
We'll have to bring that back. So in the chat is
mystery chart. Guys in the chat, do you want a mystery chart?
Someone is saying bring Grant back. Grant will be on this show next week. I'm not sure which day yet, but he will be guest hosting this show next week. So you will have plenty of Grant. Speaking of Grant, if you want to bring up slide 10, this is from the Daily Number this morning. A bullish signal, a bullish chart. Every sector with a 50-day above to the 200-day. So
nice.
That's cool.
Nice.
The percentage of stocks on the New York Stock Exchange above their 50-day moving average just hit new 6-week lows yesterday, along with the percentage above their 200-day, and the percentage above their 20-day actually looks a little bit better, believe it or not.
Wow.
All right. Well, to each their own. By the way, if you're not getting the Daily Number,
these are lagging. These are also very lagging indicators. Just understand that. You know, you're looking at a smoothing mechanism, and one smoothing mechanism relative to another even slower, more lagging smoothing mechanism. So while Grant does amazing work, and he's certainly not wrong by this data, it's just facts only. Let's just put things into context and just understand is one lagging indicator relative to an even more lagging one. Am I right? How am I doing, Strazza?
Yeah, I mean, in a situation like this where we're completing these short to intermediate term tops, probably want to look at like some shorter term indicators. This wouldn't be a signal, but it does tell you about the health of the long-term trends.
And in the chat, we're chiming in. People are saying Ari. They want Ari in the chat. Grant in the chat. Bartolone.
They want Bartolone is coming on the 10th.
Dude,
on the 10th.
Bartolone got the hot hand lately. Bartolone, seeing the market nice these days. What? Who else you guys want to see? Caleb Franson when he's not busy in Bangkok. That guy, is he ever home? No.
Home is
dude.
relative.
He's been traveling. He's a nomad.
Yeah,
nomad.
Doesn't have a
small
home.
hands. Smell like cabbage.
I don't know what that means. Wait, last thing I wanted to, last chart I admittedly have not been paying too close attention to the hot corner of late, but I'm wondering now.
Buys.
What?
Big buys there lately.
Yeah, well, that's what I'm wondering, if these CEOs are coming to the defense of their companies, and CEOs and CFOs too, and buying stock, right? So we have the hot corner here. Was there anything of note? I see Eric Sprott. That's a big name. Buying a ton of.
And it's a tiny company too. It's only like a $3 billion company, something like that. It's not that big.
But I don't see. I just see the Vertex. I'm curious about the software because,
KKR
buy
was
the
the
dip.
biggest standout. First of all, you should be sharing the table from this weekend where we highlight all of the best buys.
Oh,
The executives at KKR bought $30 million worth of stock last week. That was by far the biggest standout. But you are seeing executives step in at some of these companies that have been killed. Try to put a bottom.
Is it like for real or one of those fugazi ones?
30 million's real. You know what I mean? Like, you can't question that. It's a huge number. So hasn't helped though. Past couple days, unfortunately. You know, we got Substack blogs that seem to be more important right now.
Oh, Substack blogs.
All right, see you all in the open bar. Peace.
all right.
All right,
Strazza is going to prep for that. We got Phil in the house. Dr. Phil.
Dr. Phil in the house. Bring him out. Bring him out. Pearl Dog.
Morning, gents.
Hello.
What's happening, my man?
Great pleasure to be here as always.
Always a pleasure having you here, Perlman. How about that chicken I made yesterday, huh? Not bad.
That looked amazing. Did you put a picture up here on the morning show of that? Because that was like one of your best. And you said, by the way, I don't, like I've been off of Instagram longer than most of you have been on Instagram. And I don't even know if JC's on there anymore doing pictures. But back in the day, we used to use social media for like posting our burgers and our dinners and all that stuff. And so I don't know what JC does, but I know he texts me his dinners, like not all the time, but every once in a while. And he's a great chef. And he sends me this Tuscan chicken. It looked like it was in what's that magazine? Fine Dining magazine.
Food and Wine.
Gourmet looked like it was right out of Gourmet magazine with the colors popping. It was popping, dude. It looked great. Tuscan chicken, man, with the cream and the whole thing.
Throw side two there. I only send you the dinners that are on the Perlman program.
Oh, right. So you're not sending me the fucking ziti.
Oh, that does look.
I'm not getting the ziti.
JC. Nice job.
Dude, this is real. I did this.
Nice job.
Yeah, look at that. I mean, it's gorgeous, man.
Isn't that unbelievable?
And where were you getting the yellow from? Was that like a saffron thing? Is that like a little touch of Cuba?
The yellow is perfectly natural. It's really it's cherry tomatoes. You start with the cherry tomatoes and you sweat them down, and then the shallots, and then the fresh garlic, and that alone created the yellow. And then you throw in chicken broth and heavy cream, and it turned really, really yellow. I think you know what the yellow was? There was a really obnoxious amount of shallots and garlic. It was a lot. It was a lot. No saffron. No, it's
looks amazing, dude.
Just looks unbelievable. Spinach, an irresponsible amount of spinach.
Gorgeous.
It's the only way to do it.
It's the only way to do it because it comes down to nothing. So like when but not bad, Perlman. Not bad.
Beautiful, dude. It was beautiful. Hey, listen, I got a question for you guys this morning. So I know you guys are all into this technical analysis. So can you predict the future? Can you predict the future, JC? Can you predict the future?
Some things yes, some things no.
Really?
Yeah, like I can predict that the sun is going to set at 6:27 or whatever it is. I could check the internet because it's just science, right? I can predict that. I can with a high degree of probability predict that I will go to sleep tonight and I will wake up tomorrow morning. I don't know for sure, but I do know that the sun's going to set at that time. There are certain things that science and physics we know for sure, and then most things in life we don't know at all. Right?
And so could the QQQ hasn't gone anywhere. I'm a very simple man, and I just look at, I don't look at everything. I just look at a few little things. And I noticed this QQQ really hasn't gone anywhere since September. And, I know you like to draw these little semicircles when it's bullish. Sometimes you draw them like this, like the Kardashian. Sometimes you draw them like this when it's a little toppy. It could be a top. I mean, it isn't necessarily, we can't predict the future. We can predict the future. The sun's going to come up tomorrow morning. By the way, shout out to the little prince. Shout out Zupari. Was that his name? Who had the king was like, yeah, the sun's going to come up in the morning. But you Could this be a top? Could we be seeing a massive topping pattern, or at least a moderate topping pattern in the QQQ, the NASDAQ 100, sort of techie kind of index?
I think anything can happen for sure. I think the higher degree of probability, bigger picture, is that it is not a complete collapse of financial markets simply because we have the data. So just going in there, looking for that, knowing that that's a low degree of probability. Now, if we start to see an expansion in stocks making new lows, fewer stocks making new highs, like there are countries around the world keep making new highs. Switzerland, new highs today, Japan, Amsterdam. There are winners that continue to win. This defensive tilt in the market is also unsustainable, like staples and healthcare and utilities and real estate can't be the leaders of the market for very long. Otherwise, we know that normally happens after that. I think you need to see rotation coming in now, particularly in financials and consumer discretionaries, need to come in now. That NVIDIA reaction cannot be to the downside. If that NVIDIA reacts lower, bull market canceled, becomes a big problem for liquidity reasons, right? So,
by the way, for the last 10 quarters, every quarter, NVIDIA is the biggest thing in the world. And then 2 days later, everybody forgets it. It doesn't matter.
Yeah, but this time is different.
This time is different, exactly. But here's why I'm asking you about the plan. Here's why I'm asking you about the telling the future, is because I notice over and over and over and over again that people don't have a plan. People don't have a plan for when the VIX takes off, when we have a bear market. I have no idea what's going to happen. I don't even care, right? We could have a bear market tomorrow. I've done the planning, but I can't encourage people. I've seen it happen. It's a human nature thing. And I've seen it happen over and over and over again. And I hate to quote Mike Tyson because it's so overdone, but everybody has this, nobody has a plan. It's even worse than Mike Tyson. It's not even everybody has a plan till you get punched in the face. It's nobody has a plan and then you get punched in the face. That's even worse. And so I'm just looking at everybody right now and I'm saying this weekend, it's only Tuesday right now. You don't have to do it today, but this weekend, make yourself a plan and then Monday implement it. And that means that you account for what might happen if the Qs break down here. I'm a stupid, simple guy. All I'm looking at right now, I'm looking at like 597, and then I'm looking at 585 for no other reason than those were previous lows, recent lows. And then I know something's going on, but I don't even care because I got a plan in place that no matter what happens, I don't give a fuck. If the market goes down 10% from here, even 20%, I don't really have to do it. As a matter of fact, if the market goes down 10%, I'm looking for things to buy. If it goes down 20%, and it's not because I'm a genius, and it's not because I can tell the future, it's because I have a plan. So everybody watch it. If you don't have a plan, for like when the shit hits the fan, because when the shit hits the fan, if you don't have a plan, your decision-making, your noggin is going to be tilted. Your noggin is going to be sideways.
Perlman, I love you, and I'm gonna do a little pushback here, right?
Okay.
Only because I love you, right?
Okay.
Now, everything Perlman is saying is absolutely spot on. Have a plan. You know who the greatest that I've ever seen ever at writing out a plan is? Our homie Sean McLaughlin. Sean McLaughlin, when it comes to his trading plan, there is nobody in the business who does it better. Nobody. And, it's funny because the reason, and I've asked him, I'm like, why are you so good at this? He's like, you know why? Because when we started All-Star Options and we had subscribers, I had to explain what we were going to do, right? And it served him so well. So just totally fascinating. Have a plan. I incorporate multiple strategies, right? One of the strategies Perlman's talking about is, if the S&P 500 falls 10%, my wife and I in our retirement accounts and our kids' college funds, we're going to put twice as much, right? That month. Right? That is our plan. I don't know when that's going to happen. It happens sometimes. If and when it does, that's what we do. That is the plan. Because if you look at compound interest chart, it really rips out of control. In other strategies, what are we going to do? We're going to be buying the stocks that are going up. We'll be looking for dips like Strazza, Perlman just said, looking for opportunities to buy, some of the weakness, looking for a mean reversion. There are things to do in different strategies and different portfolios. the only way to really, truly understand how important it is to have a plan is to be in a very uncomfortable situation where you don't know what to do because you didn't have a plan. What do I do now? I don't know. Do what you said you were going to do. Oh, I didn't make a plan. Well, that's your first mistake. So make the plan so that you're not in a situation where you're like, well, what do I do now? Right? Everything is an if-then statement. If that happens, this is what I'm going to do. If that happens, this is what I'm going to do. If that happens, this is what I'm going to do. And checking that plan on a regular basis and just kind of like reiterating that and changing the plan if you have to, that's okay too, right? Not in the moment, but ahead of time, you know what I mean? And sticking to that plan, very important. Okay, that's when it comes to the market. When it comes to the Perlman program, right? Eating healthy, exercising, getting rest, putting your mind in the right place to be able to make these decisions that we're here talking about, very important decisions. I feel like Perlman, you don't emphasize having a plan as much as I think you should. Like, you're like, you fucking know what to do. You just got to do it. That's not how it works. You need to have a plan. And I'm here to tell you that one of the things that has worked for me, and I'm the furthest thing from perfect, as you are well aware, but one of the things that has worked for me is scheduling in the workouts throughout the week, having a plan. On Wednesday, it's going to be nice, so I'm going to go for a run. Thursday is going to suck, so I'm going to go do legs at the gym, right? Having a plan, it's just as important as in the market having a plan. But I feel like you don't talk about that as much in the Perlman program as you do in the market. Why?
Well, actually I do, and I do it every Sunday. And I've talked about this with Spencer before, and I've tweeted it before. I will put on my calendar in a different color a huge chunk of time. As a matter of fact, I got one for tomorrow. I'm going to do the 4x4 interval training and do a hot tub.
What is a 4x4 interval training?
4x4 is just what you do is you do 4 sets. You go and you take a slow jog, and then you run really fast for 4 minutes, and then you go really slow for 3 or 4 minutes, and then you go really fast again for 4 minutes. You do the 4 minutes fast 4 times. That's the 4x4.
Got it. But then you're just jogging, not walking.
It depends. Like when I started doing it, I wasn't doing 3 or 4 minutes in between sets. I was doing 5 or 6 minutes in between sets. And sometimes I would walk, and sometimes I would only do 3 sets. It would depend on how I felt. But now I pretty much do 4 sets with 3 or 4 minutes in between. I'm trying to make those sets faster and faster over time. My goal is to run a mile in under 7 minutes on my 60th birthday in 69 weeks. And so I do that.
Good number.
And I've tweeted it out, so you've missed it. I'll put it, I say you put it right in your calendar. So right. Sunday night, you're looking at your calendar and you see, hey, Wednesday, Wednesday's a light day for me. I'll see, hey, Wednesday, I got a 3-hour chunk, 11 to 2, boom. And I'll just put in banana or red, like right on the calendar. And then I'll just have like a spa day right in the middle of my week, in the middle of my day. It's like such a beautiful thing. And then, by the way, you do that the rest of the day, you feel like $10 million. You feel great. You look great. Everything about it is positive. And it's right in the middle of your week. It's like unbelievable. So yes,
you're going to get
make a plan. What's that?
You go to the sauna?
I do jacuzzi bath. Jacuzzi bath. There's especially recent research. Everybody's like sauna. It's great for your heart. It sort of recapitulates exercise because it gets your heart rate up. It gets your body warmer. All those things. Very true. Unbelievably and wonderful. But they're finding that the hot tub does the same thing, maybe even better, because of the way your body conducts heat. So your body takes in that heat. So I don't have I do everything from the home or out of the house. And so I don't have a sauna in my house, but I have a really nice hot tub, a really nice jacuzzi. I use that thing all the time. I can't recommend it enough. One other thing about making a plan. If you're having trouble with the food that you're eating and you're having trouble with your body weight, metabolic health, blood pressure, body weight, organ functioning, blood sugar level, one great thing you could do to make a plan is you make a 10 commandments for things you eat. and you just get a blank piece of paper and you just write down like 1, plain yogurt, 2, chicken, Tuscan chicken, or whatever chicken you love, 3, ribeye with butter, 4, eggs, 5, green vegetables, 6, et cetera, et cetera, et cetera.
Chicken wings.
What's that?
Chicken wings.
Dude, those chicken wings dude, that's another one. So JC comes to me, he's like, I'm making them in the air fryer or the convective oven. I'll make these chicken wings that are not fried technically, but they're unbelievable, lemon pepper. And so I go and make them, and they're unbelievable. And my family love, every time I get them, I'll go to Costco, get this giant thing of chicken wings, and I'll make them. I'll just put a bunch of avocado oil.
That's the secret ingredient, is the avocado oil.
Avocado oil is great for the air fryer or the convection oven. Put them in there, bake the shit out of them, and then take them out, and you do this little, you put them in a big thing, and you put the simple lemon pepper spice. You just go right to the supermarket. You don't have to do anything fancy. You can make it yourself if you want. I'll usually squeeze a little lemon in there also.
Yeah.
Those are unbelievably good, super healthy. I got people that eat those, 3-4 times a week. I have clients that eat those 3-4 times a week. Unbelievable. But anyway, you got to make a plan. Yeah, you got to make a plan for your health too. There is a point.
Also, don't be afraid to do a little lemon zest.
Lemon zest, squeeze a lemon, however you want to do
zest.
it.
Don't be scared.
1,000 times, 100,000 times. And you could do it from scratch too. You don't have to use that shaker thing. You could use the lemon, and you could just, use the pepper just like that.
Dude, lemon pepper, you get at the grocery store. It costs you like $4 and it'll last you forever. And just douse it on there. Yeah. Perlman, can you tell the folks, you've known me for a long time. Like we've been friends for almost 20 years now. We're going on a long time here. And you've seen me bulls and bears and everything like that. And I'm coming here talking about the advanced decline line on the New York Stock Exchange and the S&P 500 hitting all-time highs on Friday, right? Seeing Switzerland, South Korea, countries around the world continuing to do well, despite some selling in certain areas. Can you tell the folks, just remind them I'm not a permabull at all. I don't give a fuck. I'm too old to care. It's just facts only.
Yeah, I would take it as a contrary indicator. When people are busting your balls for being perma either way, I would take that as in and of itself as one factor, just one factor as a contrarian indicator. Because I've seen you on both sides of the tape multiple times, forever. I've seen you early bearish, taking shit to no end. And then the market falls apart and nobody's busting your balls anymore. I've seen that. Oh, I've seen it. I've seen this cycle play out. As a matter of fact, recently I was going through like some old websites of mine or whatever, and I saw like a Fridays with JC. We used to do this thing. This is like going back 15 years. Yeah. This is like in the aughts, maybe more than 15 years. We would do this thing, Fridays with JC. We would do a video. It was on YouTube, and we were like drinking beer and talking charts. Friday afternoons, like 7 people watching. You know what I mean? Like there's like nobody watching, but we're just doing it.
Good for those 7 people, by the way.
The 7 people were on the money, bro. Like they had it. And you've evolved a lot. And you have a plan. I will tell you this too with Sean. I'm gonna stop in 1 second. Going back to Sean. I remember Sean at the very beginning. Sean used to come here, and we used to work and hang out and do stocks and do social media in my basement, going back 15 years. And his risk management and his approach to the markets and his success has evolved. I mean, this guy crushed it. And he didn't come from an environment where he had, a silver spoon in his mouth. He built it all himself. He toiled and he suffered and he had setbacks. And I remember it very well. I remember he would come up. He would come down here. He was in Chicago at the time. And he built this over 20 plus years of working at it and refining his methodology and plan.
Yeah.
No shortcut to that.
Uh-huh. Yep.
Unbelievable thing to watch.
And by the way, girls, we've seen your growth over the years as well, right? Well, I mean, we've seen it too. Dude, I've had a front row seat.
Yeah. I'm the little acorn that became the great oak, man. I was, 10 years ago, I was suffering. I was not doing well. Now I'm just ready to go crush things. Let's go.
All right.
As a matter of fact, I was out this morning shoveling. I was shoveling.
For no reason. I like it.
That snow was heavy. That was some heavy snow we got. It was
good snowman snow.
Not
all the snow we've been getting, we can't make snowmen, and my kids have been very frustrated. Now we make a snowman easy.
Yeah.
Great snowball.
Make a plan.
All right.
Make a motherfucking plan.
Let's go make a plan. Let's go. Our plan will be to watch the open bar with Steve Strazza at 10 o'clock. If you're watching us on YouTube, the stream will automatically take you there. If you're watching us on Twitter, just look for the tweet with the live stream. 10 o'clock. That's in 13 minutes. We'll see you there. Thanks for watching. Go make some money. And have a good day.
YOLO responsibly. But make sure to YOLO. But responsibly.
Always.
Have a great day, everybody.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs.